Good morning, everyone. Welcome back. I think the majority have the same thought after last week. Prices are going down. It'll be interesting to see how far down they go. I just started with the Dow here. It certainly looks like it's going to take out this low, and why I put in there. Markets have greater than 100% retracement. This one doesn't yet. But that's typically what happens with a pattern like this. And, this big weekly reversal bar suggests a measured type of move lower, which, well, there is a pivot down here, but if it was to result in a measured move, I'd have to measure it to see if it would get all the way down here. Would that be a heck of a move to the downside? So far this morning, nothing happening that makes it appear that that's in the cards, but we'll see how this progresses. But with a greater than 100% retracement, the idea is that, prices have made a move and they come all the way back down after breaking that low. And the concept doesn't say how far it's going to break the low, whether it's just going to barely break the low, but the expectation is that momentum is then going to stall once that happens. And then a counter trend move up, which at that point, based on the weekly chart, we would consider, look, if it stays, same process, factory work, if it stays in the lower half, and then you get a continuation pattern, that could be one of the things that sets up where you get a continuation pattern on the daily chart, and that is what starts to move down. Now, because of this sharp move to the downside, there's nothing to stop it from going up. And look, there's that high over here. Oh, yeah. So yeah, on Friday, there was this little consolidation there. Let's see if diamonds show anything, how far down they are. Probably down below it. It really doesn't show too much, but it's right there at the low. So these little intraday bumps, maybe they stop on a retracement, but once it comes down here, and those dots, I'm not certain that how accurate that is. Just figure it takes out the low, and then you've got the unfilled gap on the daily chart. So some kind of a retracement, and the gap fill could be where it rolls back over again. So we'll watch that. The transports didn't hold 200. That broke down. The next area of support is down here. Maybe 1400 holds it. It's a whole number. So different levels, set alerts at those levels. Spiders. Let's see where they came down to, breaking the prior low. So interesting. All right, so weekly chart, same big reversal. And just based on the structure here, looks like 4,410 or 4,100 would be an obvious downside target. All that congestion there, whether it stops, I just kind of put in the middle of, this pivot high and this pivot low being in the middle. We'll see if it stops there, whether, 4,000. There are, option trades betting on that. There's just double check this open interest, and it's not huge, which is surprising, but and it's out till next month. I guess the options expiration on Friday took some of it out, but the most significant open interest is at 4,200 on SPX. And so, and this is really interesting. The numbers, as I checked the where the premiums were, I thought for sure, because it's what happens every day when prices go down, the upper strike, which has enough premium to sell, comes down. And it actually went up. And so based on, I don't know if I'm just questioning the quotes, but we'll see at the open as they progress here. But um, I mean, where prices are right now, that's a no-brainer. That's never going up there today. And based on the greater than 100% retracement, I mean, unless some news comes out, I mean, it's probably not going down to this strike. I mean, it certainly could, but to open here and go all the way up there, I'd say impossible. Impossible. I mean, gaps down, and then hey, if they said, "Hey, the war is over," everybody's shaking hands and kissing and hugging over in the Middle East, and all of that, and they picked a speaker, and the Democrats and Republicans are, dancing together, and but that ain't gonna happen. So it's a little confusing as to why the premium is at a higher level than what it was on Friday. Neither of the strikes got hit on Friday, by the way. But anyway, we'll see how that progresses. You can see the futures, the greater than 100% retracement. It's taken out the low. 4,200. It's close enough. Maybe it needs to tag it, but based on how prices came down, historical patterns are, once that happens and it hits a whole number like that, you can see it's close to this little congestion on the futures. It would pop back up again. So it wouldn't be surprising to see a little blip to the downside, and then it tries to retrace back up and see, how far it can retrace into this decline. And see, almost there, showing a little relative strength that it hasn't broken through that low. I guess ultimately it will. NASDAQ 100 futures already down through the low, multiple days down, breaking through a prior low, and looking for some kind of little move up to turn lower. And that reasoning is because of the weekly chart, where, bottoming tail bar comes up into this resistance area, which was impressive at the time, the depth of that retracement. Now it's given it all back. And so the factory work analysis says if it stays in the lower half, it should go lower. And it could go down a lot because this was so strong going up. But to think that it might go down there, that's a tremendous move. I'm not so sure that that's in the cards. Kind of, for whatever reason, maybe wishful thinking, not. But it doesn't have to go down there. In some form, it could create support, meaning it goes down and it pivots and then retests the pivot. So 42.65. Right. So if you look at there'll be 42.65 is 75 by 80. If you go to 43.65 as our doc, there's nothing there. It's too far up. Greg, what premium time frame are you looking for? SPX. 0 DTE. Today, expiring today. Always. Look at what's 0. All right. Look, the Russell is almost down to those 2002 lows. They below it. They're right on there. The tails are a bit lower. You would think, this coming down here, that's a giant, because a weekly chart greater than 100% retracement, that it would stabilize, but it's still got that same giant weekly bar. So it's going to be an interesting week, no doubt, between the economic numbers coming out, all the earnings reports that are coming out, the jiggles, and what I wrote in the newsletter over the weekend and the videos, it's all about interest rates, because you can see this came up here and it looks like, I don't know, maybe it just missed tagging five. No, it looks like maybe I think it just missed tagging 5%, but um, you know, it certainly, look at the weekly chart. I mean, that looks like it's got to go higher. And if you look at the monthly chart, I open this up. It doesn't matter what it is, interest rates or what have you. The top peaks, and you got 1, 2, 3, 4 up there, and they're just below 5.5%. So it's reasonable to think that this could move up before it hits those highs and would stall up there. So, that's about it. Watch interest rates. Oil's down a little bit. Of course, the dollar's been stalled for 3 weeks up here, doing nothing, and pretty much doing nothing this morning. I've just been hanging up there, and well, the yields have been going up. However, I mentioned this over the weekend, that check this out. This was interesting. Thursday and Friday, this 13-week came down quite a bit. Now, it's come down before, but here it came down from a V top. This has been going sideways for about a month. So, two things. Institutions are so worried about what's going to happen that they're buying the shortest instrument, right? 13-week T-bills here, or they think the Fed is done. So after whatever uncertainties pass this week, it will be interesting to see whether this stays here, lower, back up again. So we'll just have to keep an eye on it. Well, interest rates have been going up. Alex is asking me, for those on social media, about thinking about the yield curve steepening. So the 10-year, the 5-year has been going up. You can see the 5 by the 30 down here and the 5 by the 10. It's actually positive now. So the 3 by the 30 is knocking on the door of going positive. And, these things lag tremendously, but, the 10-year going up like this isn't going up because the economy is doing so well. Far from it. I mean, I think it's just that, look, the Fed stopped buying bonds, right, replacing what expired. And maybe institutions are saying, hey, if we push this thing up, we can get this, uncertainty over with. And now this was the most interesting thing and one of the most interesting things that happened over the weekend, that the 13-week came down as it did. Now, could it be the Middle East? What's the next shoe to drop over there? And what have you. So keeping an eye on this. So as this is going up, and I say for the wrong reason, because it's not that, hey, the economy is doing so great and the demand for money is so strong that these interest rates are going up. This is coming down. So this is what we want. And if that continues, what we really want to see continue is this flatten out. Maybe it gets over to 5%, but flatten out. And even before the Fed starts to even, talk about lowering interest rates, this starts to move lower. And that would be a great sign looking into next year. But, right now it's just this observation of what I see, and I'm wondering, will it continue? And you can see the internals here are about neutral. This deep bearish sentiment kind of worked its way off as things rallied, and breadth came down as you would expect. And just because it's into this green area, I don't really think it means very much at this point. And the VIX finally closed up above 20 here. So everything points to a market that should go lower. We'll see how that plays out. You can see the weekly of the S&Ps here, and that little shelf. Well, it's multiple, couple of months long, but it really doesn't look all that impressive as opposed to this big rolling top and those interest rates going up. So let's see if this holds. We'll see how the week plays out, earnings reports, economic reports, and all of that. And, day by day. But right now it looks like, as long as interest rates continue their march higher, equities are going to continue to make a nosedive lower. All yours, Dan.
Good morning. Yeah, that was all the news this morning. Obviously Israel, but yeah, the yields topping 5%, as Greg mentioned in the weekend video and this morning. So we have long and shorts. The strategy Greg mentioned, this is not a no-brainer place to be entering new shorts, unless we have a beautiful pattern. So I wrote down these few that I actually gave. Now this is a nice new pattern. It's a bear 1, 2, 3. I know it's at resistance, but look at the parallel 20, 50. Look at the weekly. So 30-minute low. I'll take that as a new trade. Your BF.B, sell setup, reversal. Now there's a lot of these that they're beautiful dailies, but the weeklies are climbos. So that's not the probability of that daily trade working would be substantially higher, up here somewhere, as opposed to now. So I'm not saying don't trade it, but just keep that in mind, that so many things are down a lot that, maybe it does come down a couple more days, but this could set up a retest pattern. Like, just keep that in mind. CMS. Now, say this one's better. The weekly is better than that other one. So yeah, this has room. I just, eyeball it here, 52 or whatever. Monster, same deep retracement with a climb on the weekly. So that's tradable, but I would not be expecting a new low. Roll around on YouTube's asking about Lulu over Friday's high. Sure, as a bounce. We actually sold a put spread on this, Raul, on Friday. So we're looking at the same things. I don't. This was not earnings. I don't think it was. Instead, this was being added to the S&P 500, but nevertheless, the chart is a chart. And that's a pro gap breakout. We got a pullback, bottoming tail support. So yeah, that's fine for directional. Particularly if the markets are turning. I'm not interested in longs if the markets are still just churning their way lower, unless we get a capitulation. A couple earnings here, not many. BOH. No, I can't tell where your gap in pre-market. You look lower. Delta X-ray, it's just down too much. I mean, I'd be more looking for 30-minute high as a short-term pop. Oh, gap in here, down a lot, no pattern. WSFS, that's a closing breakdown, daily, weekly. Can't tell where it's opening, but that looks lower. FTV. Why am I looking at you? There was some news on him. I forget what it was. but down a lot on the 200. We'll see what it does. Walgreens got an upgrade. Sloppy pattern, but possible put spread. 30-minute high if the markets are holding at the time. Dollar Tree. This was a long of ours last week. Had a beautiful little breakout of a bottoming pattern. And nothing to do with it now, but if it can take out a prior bar's high, then it would be a buy setup after a gap breakout. I'm going to set an alarm at 112.50. We got a couple of the FANGs reporting this week. So maybe some bad news in the FANGs will bring a capitulation lower in the markets. Looking at the FANGs now, Netflix actually holding the best just because of the fact that it's going sideways. We did a condor on this into the close on Thursday. Way out of the money, I think 460s. The word it's working perfectly. It's just going sideways. So we're making our volatility contraction and time decay gains. But the others are looking weaker here and lower. Apple looks like it's headed to the 200. Amazon looks lower. That's a bearish pre-market. Gapping down, going sideways. Bearish weekly. That's a bearish engulfing movement. Google. And I'm still in an uptrend, but just falling with the markets. Yeah, Tesla looked horrible, still looks lower. Remember I said the weekly looks like it could go a lot lower. I think 200 is easily in the cards, maybe 190. Microsoft. Does this have earnings this week? I forget. Yeah, I think I was going to give this a call spread. But earnings, yeah, tomorrow. So that's why I did not do a call spread. All the FANGs, really? Almost there. Now look at this RBMD. I think it's bio, went up hard, came down hard. Still a buy setup if it were to take out a prior bar's high. But when they come down hard like this, don't expect a new high. Nevertheless, gapping down, that's getting whacked. So, welcome to the world of trading bios. Proud, low alarm, 175 alarm just went on. This is a call spread we got into on Friday. Set a new alarm. I'll probably be looking to take our money. That's down a lot. I'll watch it here. Other computer. So yeah, look, I had Lulu on my list right here, and that we reviewed with Jose. Chevron buying Hess 163, range bound, no pattern, possible condor. An ETR sell setup with a multi-bar turn at the 2050 with a small little breakout failure. So that's a good new trade setup. Joby, why am I looking at you? It's a $6 stock, but that's a nice new closing breakdown and a downtrend parallel 2050. I'm personally not crazy. I kind of just have a general rule. I don't like shorting under $8. Just, they start to get cheap enough where that could be a buyout target for somebody. But that's a beautiful closing breakdown. So that looks lower. NAS. That's I don't see any pre-market prints, but that's a beautiful double bottom. The only thing that would make it more beautiful is if we had a big old bottoming tail Thursday or Friday that took out the prior low. But that's a W bottom. Momentum move, a counter trend bounce, less than a third, and some type of retest. It's a W right out of your alphabet soup. It's not a hard pattern. Teach little Johnny. But it's all about getting the reliable potent turn. So I have that in the bottom right here. AMBA, that's going down till it's not. Looks lower. BSX, it's a sell setup, but I don't like this gap reversal right here. Yeah, my page got corrupted, so I actually lost a bunch of watch list items I had over the weekend, unfortunately. Ether, with all the news on Bitcoin, and look at this gap breakout. So at the top of the range, that's a range. Got flat 2050, but I got a rising 200. This breakout weekly month. It's a sloppy monthly, but this could be setting up a home run entry. Stop under Thursday's low. Let's watch that. EEFT was a nice gap breakout on earnings. Let's keep an eye on that as a put spread. LYB looks like a short. Start off with a day trade. You had a big old, bull trap here. There's a lot of these, like the Qs, spiders. They're little bear flags here. Look, it's in a downtrend. Lower lows, lower highs. Two topping tails. Range expansion. Looks lower. All right, a couple of alarms here going off. An IYT we had as a call spread, so that's good to go. It's filled. Broker, we're short. That looks great. Let me set up a new alarm. This one was courtesy of Aichi. I'll set alarm 5960. Low alarm 5860. We have ETR low alarm. All right, so this was a new short. So we're gonna have to wait for a bounce to get into. Yeah, this was just shorting the stock under 9307. G, as in golf, was a 1, 2, 3 is triggering. We'll come back to ETR. G is good to go. That's a short. Monday mornings are typically my busiest. I got alarms going off from new trades. Let's do 5-minute low on G instead. Let's give it 5 minutes. Market's not bouncing here. IQV. We're still in trail mode short. This has been a very easy trade to manage. 186.59.
ETHE is starting to move above the top of that range.
Yeah, if you'll help me watch the daily, weekly, monthly look good.
Let's take a small position. And that's the only choice other than seeing if it pulls back in. And I mean, at the moment, it's a new high. So it's breaking out.
All right, so I'll give a third to our ETF letter.
Yeah.
All right.
Well, if you want to give it to the advisory, because I know it's an ETF, but kind of,
That's fine.
you know,
Fine with me.
Microsoft and Meta kind of acting okay here, and Amazon. But I'm looking at the futures and NASDAQ futures, and I see they got rejected. But kind of weird. Oracle hanging in there, Netflix.
Low alarm. We go in this dog for a while, but it's an early alarm. Browse. Low alarm, nice. This is kind of a free fall. Let's see what the credit is now to close. 92. Yeah, it's 8 cents. Let's take it to avoid a week's risk. RCL low alarm. We're in trail mode. Clorox low alarm. That's been a dog of ours.